within the shortest time possible. So today we are joined by Nahashon Mungai, who is the Executive Director for Global Markets at Standard Investment Bank. And we shall be talking about those investment solutions that, as I said, that offer premium returns, but also offer capital preservation, and would like to encourage you to ask all the questions that you may have, because it will be a Q&A session. We shall not be having any presentation. We shall be doing a lot of questions. So ask all the questions that you may have. You can send them in on the chat box. Then we shall cover them as they come. Asanteni sana. So for now, let me hand over to Nahashon to introduce himself. On my side, sorry, before he comes on, I shall be joined by my colleague later on. Her name is Carol. She will be joining in later on. But for now, let me introduce Nahashon.
Good afternoon, everybody. So my name is Nahashon Mungai. I'm the Executive Director of Global Markets at Standard Investment Bank. I'm very excited to interact with you today, and I'm looking forward to this session where I can answer your questions. Thank you. Thank you, Ellah.
Asante sana. Karibu sana, Nahashon. So I think we shall start immediately with the questions that we've already received. But before then, tell us a little bit more about Mansa X and what Standard Investment Bank does.
Okay, thank you very much. So I'll just quickly tell you who Standard Investment Bank, what we are and what we do. So Standard Investment Bank is one of Kenya's largest indigenous investment banks. We were founded in 1995. And at the time when we were founded, we started off as Standard Stocks, and only later became an investment bank in 2003, about 8 years later. And our company capital at the moment is around 850 million shillings, which is about more than 3 times the regulatory requirement, which is 250 million shillings. That's what you're required to have as your capital by the CMA. So we are more than 3 times the regulatory requirement. Additionally, we have over 15 billion worth of client assets that we manage. And our client base includes governments, fund managers, corporations, financial institutions, high net worth individuals, and also retail investors. So we serve everybody across the investment landscape. We are also members of the NSC, Kenya Association of Investment Banks and Stockbrokers, and have been licensed as well to be one of the only investment bank and fund manager that can invest on the online trading market. So additionally, our products and services, so we offer our clients various, exposure to various assets. The first ones are equities. So our equity arms trades in company stocks and derivatives, where we help our clients to buy or sell shares on the Nairobi Stock Exchange. And we also enable our clients to also trade on the Nairobi Derivatives Exchange. And in this regard, we were actually the first ones to execute a trade on the Nairobi Derivatives Exchange because of our commitment to new products. We also have a very strong fixed income desk. Fixed income refers to investments in government bonds, corporate bonds, treasury bills, and we are one of the largest players in this space locally. We also have a corporate finance department where our team works with Kenya's largest public and private institutions. And we have informed the strategic growth of companies in creating, optimizing their balance sheets, as well as capital raising, whether through IPOs or private placements. And most of the largest transactions that have happened in the last 20 years or so on the Nairobi Stock Exchange, if you're looking at things like the Kengen IPO and so on, have actually passed through our corporate finance department. We also have a very strong research department where we do due diligence and provide insights for investors. We typically issue trading briefs, fixed income wraps, weekly market reports to our investors. And this is very important for investors, especially institutional investors who are looking to make trading decisions. And the and these decisions will be wholly based on the due diligence that we help them to have. Then lastly is a global markets department. I think that one is the one that's very specific for today's conversation because it's under the global markets department where we create asset management products. The largest one being Mansa X, where we created a fund that is a multi-asset strategy fund. And within global markets, we also help our investors to create hedging solutions if they have foreign currency exposures in the normal course of doing their businesses. So based on what part of the world that they are in, most businesses, especially if their businesses are international in nature, will typically have foreign currency exposure risk. And through our global markets department, we are able to offer them advice on how to hedge out some of those risks. So what is Mansa X? So Mansa X is a fund that we started at Standard Investment Bank at the tail end of 2018 to deal with the investor fatigue that we had witnessed. So we noticed that a lot of investors were looking for, first of all, investments that were giving a higher return than they were typically receiving at the time. But they were also looking for consistency in those returns, as well as the ability to access their funds as and when they needed them. Creating a combination of all those factors is quite difficult. And from around 2016, we worked very hard to create a product that will be able to give investors this solution. So in 2017, the Capital Markets Authority released the online forex trading regulations of 2017, which allowed a new category of fund managers referred to as money managers that were able, or rather that were now allowed within a regulatory framework to invest on behalf of investors in the global financial markets. It's using this license, which we then received at the tail end of 2018, that we created Mansa X. So Mansa X is a combination of two licenses, essentially. The first one being the money manager license that we have from the CMA that allows us to create exposure for investors in global financial instruments. The second one is really just our investment banking license that allows us to also help our investors have exposure to certain asset classes that are best done from an in-house perspective. So based on this, we were able to create a fund called Mansa X. It's a multi-asset strategy fund with a long short trading model that is designed to consistently give higher returns without necessarily disproportionately increasing the amount of risk that investors are exposed to. So we're very happy with the growth we have seen in Mansa X. We started with assets under management at the time in 2018 of around 50 million shillings. And now we manage about 5.2 billion shillings just about 2 years later. So we are very proud about that growth. And it's proved to us that the Kenyan investment public is actually looking for exciting products to invest in and validates our initial argument around the launch of that product. Thank you, Rose.
Interesting. I think hello? Yes. I think when it comes to Standard Investment Bank, you're that bank that we as small players in the investment industry, we want to get at, like you're our role model. And thank you very much for that introduction, Nahashon. I think it actually opens up the questions that we have. So there was a question that the first question was, what classes of investments of assets does the fund invest in? I think you have answered that, but you can expound on that if need be. The other question was, I'm just going to read it the way it is. Trading the financial markets like you do is done using foreign currency. What if I already have my savings in USD, that's currency, and don't want to lose some of it through the bank exchange rates? Is it a must that I convert? Sorry. is it a must that the accounts at SIB are in dollar, are in KES? Yes. Is it a must that the funds that are accounts in SIB will be invested in Kenya shillings?
Okay.
Yes.
Okay, maybe I'll start with the first one. What asset classes does a fund invest in? So the asset classes are, the first one is currencies. We invest in various currencies, both global currencies and local emerging market, frontier market currencies. We also trade in commodities. So if you're looking for exposure in oil, for example, natural gas, we create exposure for investors in that. We trade precious metals, gold and platinum. And we also trade in global global equities. And how we do it is quite unique because we actually buy the real underlying stocks of real underlying companies around the world. But of course, our bias is towards the American market, but we have found also a lot of success with some European companies as well. We also buy and sell stock indices and exchange trades within the fund. Another big part of the fund, and this was actually very lucrative for us last year when interest rates were reducing, is really a fixed income portion where we buy and sell government bonds. So the second question is whether the investment has to be in shillings. Yes, at the moment, Mansa X is a Kenya shilling denominated fund. So typically when you're running a fund, you have to choose a currency that becomes your benchmark. And because you will most likely invest in various currencies within the fund, and it's really up to the portfolio manager to hedge his exposure to reduce compromising the return when he still has to report in the local currency. And that's a choice that you would have to make at the beginning. So for us, because our fund is domiciled here in Kenya, we chose the Kenya shilling to be the currency that the fund works with. But in the future, because we've started seeing a lot of requests from especially diaspora clients who are asking us, can we invest in dollars and so on. So one thing I always advise them is if you want to invest in dollars, you can still do that. Then on our side, we can price you we can give you a hedging solution. All right. So if say, for example, you invest in Mansa X and Mansa X delivers a return of say 20%, and we had hedged you out using any number of derivative products, then that might shave off that return by say 10 to 12%, and that would still be the dollar return that you get. So your dollar return will be much lower, but it will be a dollar return if that's what you do. So if you are getting a Kenya shilling return of say 20%, then maybe your dollar return will be close to 8 to 10% because of those hedging costs. So it's a solution that we have for our investors. So like this investor, I see Martin Oloka, if you reach out to us, we can actually help you structure a hedging solution for your funds and still allow you to have exposure to Mansa X.
All right. And what are the inherent risks for the fund?
The inherent risks for the fund are very similar to any other fund. The most obvious one being market risk. Okay, the fact that markets can and can always move against you, because this is a completely market determined fund. We do our best to employ a lot of risk management techniques to protect our investor funds, but there's always the risk that markets go up and they go down. That's your biggest risk, and this is something that we constantly manage on your behalf. The things I want to make it very clear is, due to the fact that we invest in so many asset classes and we invest in so many financial instruments, it means that Mansa X is inherently protected from concentration risk. Concentration risk means that if I have invested in the stock market, for example, I still have investments in fixed income, I still have investments in some derivative products, means that a lot of things would have to go wrong for you to actually lose your money. Unlike some other funds where, I'm only in 5 or 6 asset classes, and not even asset classes, just 5 or 6 instruments, and all of them having what you call one-way risk, because maybe I have bought 5 shares in the Nairobi Stock Exchange, and we all know when a correction comes in a stock market, it goes down with all the stocks. Then that in a fund like that, you actually have a lot more risk than a fund like Mansa X, where we have really spread out your risk. So that's how we protect our investors.
Okay, so the idea here is diversification into different asset classes, so that Absolutely. At least you can be able to protect yourself. Yeah. So we continue. Please continue asking questions in the chat box. Keep them coming. We shall continue. And not just about Mansa X, about the investments industry at the moment. We shall answer all the questions that you may have. Then talk about the withdrawal procedure when it comes to Mansa X. Can one withdraw their earned profit, or what is the holding period if there's a holding period, and also the minimum amounts? And also you can talk about the investments for people who have small monies, not the minimum initial investment currently that is at 250 shillings.
Okay. Yes, so we have a lock-in period of 6 months. What lock-in period means is you're not allowed to access your funds for at least 6 months. But after that period, you can always access your profits, or even any portion of your investment as you wish from that period. And the withdrawal process is pretty easy. You just write to us, and we'll be able to turn around a withdrawal for you within 48 hours. And that's one of the things that we are very happy about, because we're able to create a fund that again offers liquidity to our investors, allowing them to access their funds quickly as when they need their funds. Then, sorry, what was the other one?
The other one was on the minimum amount.
Oh, yes.
Yes.
Yes, so yes, I know I have said this on 2 forums before this, and I might sound like I'm repeating myself, but yes, we are working on a product which is going to allow investors to have access to a product that allows them to invest smaller amounts, 250,000. At the time we started this fund, it made administratively more sense to have a higher minimum balance. But we're working very hard to create a product. We are at the tail end of that. We are working very closely with the regulator. And one of the reasons we haven't yet launched is because even from a distribution perspective, we need to get certain things right, especially because this is a product that, first of all, you'll have a lot more clients on board, meaning that we have to be very careful how certain systems are working. So we are testing a lot of this in the background. We have actually been testing our systems for about 2 months now. So once this testing phase is over, then we'll be very happy to launch this to the product. Because when we started out Mansa X and the whole idea of giving exposure to investors to various asset classes, we wanted this to be something that's accessible to everybody. So that is a dream that we still have, and your concerns are still our concerns as well, and we look forward to solving that.
Perfect. I like that we are actually listening to the small investors, because I think money actually moves a lot to within the small investors, because you can be able to spare at least now 10,000 shillings maybe on a monthly basis, or on per fortnight for investments. And I think the market is ripe for this product. Yeah, very ripe.
I mean, we are excited because the fact that we have a lot of people saying that they want to invest in this fund, even with smaller amounts, is proof. Again, like I said, it validates our initial dream that investors are looking for other ways to invest, and that's really exciting for us too.
Yes, of course, we're looking for ways. I am saying we because I'm also an investor. We're looking for products that it's very hard right now, actually, in the market. It's very hard to get a product that gives you as a good return, a very good return, and also can preserve your capital, because risk and returns go hand in hand mostly. So sometimes you have investments that offer very good returns. However, your principal is not guaranteed. Yeah, anything can happen to it. Yes. And we had also talked about the withdrawal procedure. I think if you can clarify, Nahashon, you can withdraw the profits that you earn on a monthly basis.
After your lock-in period, yes, you can.
All right. Perfect.
Yeah.
All right. Okay. So how do you compare local stocks and Mansa X? Like, where would you put your money? How, and also via circles. Of course, we are going to assist also on the circles part.
Okay. Of course, for us, we have invested and participated in the local stock exchange for more than 26 years now. Mm-hmm. So there are still very good opportunities locally. There are still some very good stocks you can buy locally. There's still some good ways you can make money in the Nairobi Stock Exchange, definitely. We at Mansa X also invest in local stocks, just to be very clear. When we say we invest in global financial markets, Nairobi is one of them. So we also invest in the Nairobi Stock Exchange. The only thing I'd say is, if, for example, you move to the New York Stock Exchange, then you're looking at a lot more stocks that are investable, all right? And that's one of the things that, I mean, that's one of the reasons why we gravitate towards that direction. And we have found a lot of success trading shares, you know, in the US, in Germany and London. And the reason for this is because those markets, again, are more mature than ours, meaning that they're also very liquid. Liquidity is very important for us at Mansa X. The ability to exit positions very quickly, that's a very important factor and a very important part of our trading technique. And that's why we like those markets. But that's not to say that local markets are not as good. The only thing I'd say is the costs of trading differ significantly. And I guess this is something that, of course, maybe our regulator, I mean, in conjunction with the government, can work towards. Because if you look at the cost of entering and exiting stock positions in the New York Stock Exchange versus what you pay locally, it's a lot higher locally, and it was made even more costly when the government introduced VAT on stock brokerage fees. So a bad situation turned into us. So there might be opportunities here that are very similar. So, for example, if I'm buying AT&T and I get a 10% move, the moment I get in and out, I'll probably keep about 9.5% of my return on that trade. But on the local stock market, I'll probably just keep about 5% of that trade. That tells you that trading costs locally can eat into the return significantly. Mm. So that's a concern for us. But all of them are markets that we trade, yeah.
All right. There's someone who had asked why the locking period. I hope you have been answered. At least it's so that you can allow the fund to make some money before you can pull out, yeah?
Yeah, and just to be clear, we don't even have a penalty for exit. I mean, I'll tell you the truth, we don't. It's just that as an investor, you need to you also have some discipline around, I invested somewhere, let me give it some time to grow. So six-month lock-in period only just makes sense. And we feel that it's a much shorter lock-in period than funds that are very similar to ours employ.
Mm. All right. And is the fund exposed to any crypto as an asset?
At the moment, no. We have never invested in the crypto market. I know we have a lot of critics who then argue that our returns would have been much higher if we invested in crypto markets. So there are two reasons for this. One is really just from a portfolio management perspective. Cryptos are very volatile, and we were not very sure we wanted to introduce that volatility in the fund and increase disproportionate risk to our investors. So at the moment, we have not touched cryptos. And the second one is also from a regulatory perspective. the CBK and the CMA are still not very clear, and there was even there was actually an actual warning from the regulators just about 2 years ago when we started against trading in cryptos or engaging in crypto business. So for us, no, we haven't traded in those.
Okay. I mean, crypto is literally, currently it's just being moved by one person's word. Yeah. When he wakes up and says, Tesla is going to invest in, or we are going to be accepting crypto, it moves. When he wakes up and puts,
yeah, that's a very good point you bring up, because the value of a crypto asset, or let's even just say a cryptocurrency, is really just determined by what you say it's worth.
Yes.
Okay, and that's a danger. We find that dangerous because, you see, for us, we typically invest in what you call yielding assets, meaning whether we are selling them or not, there's some cash flow generated from holding those assets. If I'm holding stock, then I'm receiving dividends from those stocks. If I'm holding government bonds, I'm receiving coupons from them. If I'm holding real estate, there's rental income coming from that. However, if I'm holding crypto, I can only ever make money if I sell at a higher price to somebody else. The only non-yielding asset that we hold is gold. Okay, and there's a reason for that, because we use it to hedge some of our currency exposures. So that's the only non-yielding asset that we hold. Yeah.
Okay. Please comment about the social media issues that were there with Mansa X. There was an article that was going around. Yes, just comment on it. The question is whether it's a Ponzi scheme. I would try and answer it and say, for Ponzi schemes, really, they don't have anything. They don't have an asset base when it comes to the investment. Like, they can't show you, we have invested here and this is where the returns are going. It's more like the biggest person gets money from the smallest person until the pyramid goes down. So yes, over to you, Nahashon.
You actually answered my question. Part of it.
Yeah.
But yes, that's a very good introduction, because yes, a Ponzi scheme means that I actually don't buy or sell anything, right? So I receive money from Peter, and then I use that money to pay Paul, and then when Tim comes in, then we use it to pay Paul, and so on, and then it grows like that. Now that can work for in perpetuity unless investors stop coming in, then you become exposed. So it's very unfortunate that I even have to discuss this, because I find that even the caliber of bloggers that we are dealing with here are, I don't think they have any authority to even have been discussing investments of this nature. But the truth of the matter is, they attacked us, yes, last year, claiming that we were a Ponzi scheme. And one of the questions they had was, where does Mansa X invest their money? Can you show us? You need to show us where your money is. So I don't know whether they were coming from the traditional aspect of, they need to see buildings that we own around town that are now owned by Mansa X, because we suspect maybe that's where their level of thinking was coming from. But we were able to take them to court, so we took that very seriously, because not only did it impact us and our corporate ourselves, but it also affected our investors, because our investors started worrying about, are these people actually telling us the truth also? So we took them to court, and we actually won all the cases against all those bloggers. One of the reasons we were able to win against them was because we are very regulated by the CMA. The CMA does regular inspections and checks on us. So the CMA was actually able to come out as our regulator and on our behalf made it very clear that everything we're doing is above water. And that's one of the reasons why the court was able to quickly issue a ruling against these bloggers. Actually, one of the fastest rulings against these bloggers that have been seen on this land. So there was absolutely no truth in any of this. And one of the things that our investors can have comfort in is that one of the things we are changing in our fact sheets moving forward is really just also outlining our top 10 holdings in the fund. Okay, this is something that we will start doing just for the sake of our investors. We won't outline every single asset that is owned by Mansa X, because then that doesn't make sense, because then everybody can just go out there and replicate the fund. But we can give you the top 10 holdings that we have. But if anybody has any further questions or is concerned about our holdings, another thing is the CMA holds all our trading records from the regular inspections that they conduct on us.
Perfect. Perfectly said. I think it's well answered. I think it also answers a question that was on the chat from Peter Kinodia, who have invested with them and want to join Nogopa lest I lose my money. I think, Peter, you're protected first. There are certain levels of protection that are there. First, the regulation from Capital Markets Authority. And second, the fact that they are trying to diversify as much as possible so that at least you get good returns, and as well you can make sure that kind of the principal amount or whatever you had invested has a preservation on it. Yeah. There's someone who had answered the question, Staki achoke sana, ameinua mkono for long. Joseph Ngugi. You can unmute yourself and ask the question.
Hello, can you hear me?
Yes, we can.
Yeah, my name is Joseph.
Mm-hmm.
I'm a young Kenyan in this country.
Mm-hmm.
So I'm asking, how is Mansa X be able to maneuver the storms of COVID-19? Because currently other markets, the stock market is performing poorly, but Mansa, they're able to deliver a good return above inflation, which is quite recommendable. So what is their game plan in this market?
That's a good question. I think it answers a few other questions that we have, Nahashon. And if I may answer for Nahashon before he answers, the game plan is diversification. Nahashon?
Yes, thank you for that. And Joseph, first, thank you for that commendation. I'm not so sure what you mean. If you look at how markets recovered after COVID last year, the stock market, for example, the S&P rallied over 30% just post-COVID to what you call a V-shaped recovery. And just this year alone, most stocks are actually printing at an all-time high. As we speak, just yesterday, the Nasdaq closed at an all-time high. Nasdaq is a collection of most of the tech companies in the world. So markets are actually not struggling. If you look at commodities like oil, during COVID, I mean, we had oil actually dip to the first negative prices we've ever seen in the history of the world, where oil prices reached negative $37 a barrel. As we speak, we are now trading at $72 a barrel. Look at that recovery. So markets, Joseph, just to be clear with you, are actually not struggling. In fact, I'd only say it's just maybe the last 2 months or so that most stocks have averaged, have had a mean reversion of about 1%, which means that not much of a movement. But that's also because we are going into summer. So trading volumes have actually reduced, but it's nothing to do with the underlying stocks. And then let's just talk about the kind of stocks that Mansa owns. So we typically buy high dividend yielding stocks, all right? And that's part of our strategy here. If you look at most dividend, the average dividend yield that Mansa owns is above 5% on dollar-denominated stock. And we've not even talked about the capital appreciation on those stocks. That's how we're able to make our return. And at any one time, Mansa X, we're holding over 40 individual stocks. And we haven't even talked about other asset classes, just stocks alone. We're already on about 40 stocks. That diversification allows us, because you don't really need to beat the market by a very big margin. There's a reason for that. We're already operating from a frontier market, what you call a frontier market, which means that your own currency depreciation is already on your side. So for us, if I'm able to squeeze out an average, a return of say 15%, from global markets, the rest of the return will just come from the depreciation of the shilling alone. So that's one of the advantages also that we have locally. So that is how we're able to do it, Joseph.
Okay.
I hope you've been answered. So there is Elizabeth and Timothy. If you can chat your questions as well, if you're in a position to chat your questions, please shoot them at the chat box. We shall answer them as we go along. I think we start with Elizabeth first, at least to hear a different voice than Rose and Nahashon.
Thank you. Hey.
We can hear you.
Okay, so I'm new at this and I'm sorry if I'm having to repeat what has already been addressed, but I'd like to kind of consolidate my questions. So number one, what is the current return on investment for Mansa X? Number two, is that return on investment on a daily increased basis? Like, do you add yesterday's profit to today's capital in order to trade it? And then what happens beyond the 6 months? And beyond the 6 months, do we still lock it in or is it open? And then lastly, do you have a Nakuru office? I'd like to join.
Okay, so at the moment, for the first quarter, we returned 20%, around 20% before fees. We are yet to announce our second quarter returns, which are coming out in 15 days. And then how do we calculate our returns? Is it on a daily basis? Yes, it is. So every day, the fund goes through what you call a revaluation. Based on the open positions that the fund is holding, we then attribute either a gain or loss to the fund on a daily basis. This is done by our system. What happens beyond 6 months? Do you then go through another lock-in period? No, after that you're open. If you've been invested with us for at least 6 months, you can always access your funds for the rest of your lifetime in our funds. Then the fourth question, do we have a Nakuru office? Unfortunately not, but we will now endeavor to open one because you're one of the many people who actually reached out to us with that. Reached out to us with that question. Yeah, hope that answers you.
I think it does. And also, just to note that the investment returns is usually on the only way you can be able to predict, you can't really predict the investment returns. You can just wait to see how the market plays out. But now, as long as Nahashon is behind the desk and trading very well, we know that the fund is in good hands. In 2019, you did a return of about 24%. Last year, you did a return of about 18.75%. That is net of fees and withholding tax, which is quite impressive. So we can only wait to see what you do. If you've done quarter one at 20%, so annualized, let's say how much?
That is annualized. That's annualized.
Oh, that's annualized.
That's annualized, yes.
Oh, wow.
Yeah,
okay.
That's annualized, yeah.
We can only wait to sit down and wait now and see what the return will be by the end of the year. Yeah.
Yes, and it's very good that you point that out, because one of the things that can be very confusing to investors, and this is as a result of how funds have typically been marketed in Kenya and how investments have been marketed in Kenya, because investments are always marketed as bring your money to us and we will give you 10%, or bring your money to us, we'll give you 30%. In fact, we see some other investment avenues saying, bring your money to us, we'll give you 5% every week. So there's a very big bias to marketing investments based on their returns. It's very important for you to note that at Mansa X, the return that we give you and that we quote is really what we've done historically in the past. But it's a result of what we set out to create in the first place, a fund that is very well diversified, that gives you exposure to different markets, therefore preventing you from having concentration risk. And this, if you do this properly enough, you most likely will have an above average return. So we do not promise we don't guarantee any returns. And we might even have a higher return than we did last year, but typically that is the whole philosophy behind the fund, because sometimes people ask us, how much are you looking to give us this year? We can't really predict that, but we can only tell you that based on a well thought out portfolio allocation techniques and proper execution of said technique, then we can give you a certain return. And this is something that's very important for investors to realize, because the reason why a lot of people have actually lost money in markets is exactly because of that. Because then there are people who come to them and give them false comfort that they can guarantee them returns. And then these people, most of the time, turned out to be really just stealing their money. And the reason for this is because a lot of investors fail to also ask other questions that are just as important. For example, how quickly can I get my money if I needed it? What you call liquidity. That's a question a lot of investors will not ask until the day they need their money, and then the fund manager tells them, no, we can't give you your money because of A, B, C, and D. So there are other questions that Kenyan investors need to start asking other than just being predominantly focused on that issue of return.
I agree. I think we usually look at the investments in terms of, how much money am I making? There's so many other things that you need to consider. Yeah. And you might actually be having the money to invest, or you think that you need to invest in Mansa X, but when you look at your budget or something of the sort, or your future predictions when it comes to money, you don't have the capability. So before you invest, you actually need to consider your risk appetite versus your risk capability as an investor. Always consider that. So there is a question from Anne Timothy. Yeah, Anne and Timothy. If you can please chat it in, please do so that we can go through it. And then there's a question that has come in terms of the future of Mansa X. What is the foreseeable future of it? What is the expected lifespan? Of course, we would want it to last forever. And then in terms of the return, someone has said, when I signed up, there was a promise of returns that can easily go beyond 24% threshold. These days, you talk about of up to 24%. What has been your experience for you to provide that capping? I think you have answered it in a different way.
Okay. Okay, first of all, what's the future of Mansa X? And thank you very much, Ellah, for that. Because for us, this is a going concern. We've been around for 26 years. We are not planning to, just come and do a small gig and then get out of the investment space. When we set out with this product, one of the things we were trying to do was really just change how Kenyans access investments. Let me give you an example. So about 10 years ago, if you needed to take a taxi from town to Westlands, you'd have gone to Hilton. There used to be a parking lot there where there were taxis. So you get a taxi there and then you go to Westlands. If anyone at the time told you that in a few years you'd be using taxi hailing apps to get a taxi, you'd never have believed it. But at some point, everyone in Kenya was doing this. And if you look at how the level of exposure that Kenyans have, it's quite significant. Kenyans have one of the highest internet usage levels on the African continent. So when a Kenyan wakes up in the morning, he uses an Uber to go to the office. He uses a food application app to order food for lunch in the office, for example. And maybe later in the evening, he watches YouTube or Netflix. And then when it comes to investments, we are happy to tell our investors that the only thing you can do is buy some land in Kiserian, and that's it. There's a very serious disconnect. So the future of Mansa X and SIB is actually just to bring the same innovative tools that exist in all these other areas of our life, we believe should also exist within how investors can access and how investors can manage their portfolio. That's why we were also one of the first through one of our subsidiary, Forefront Management, to actually create the first robo-advisors in Kenya, where robots which then work on the input of the client based on their risk profile, are able to then advise clients on where they should invest. And we believe that this is really the future of investments in Kenya. So we are here to stay, and we believe that this is really just the beginning.
Perfect. Very perfectly answered. I think Anne Moremi, you can unmute yourself.
Okay, thank you, Rose, for unmuting me. Thank you so much, SIB and Nahashon and team, for opening up a space for Kenyans to be able to trade in the products that you're trading in, which is a different instrument that has not been available for so long. And when it has, it's not been regulated enough. So people have lost their money. So my question is, there is a new market that has opened up internationally, which is cryptocurrency. And being in the forefront of investments in Kenya, are you doing anything to allow Kenyans to access that market in a regulated way? Because we are interested, but we have no knowledge and skills. Neither do we know how to do it. But being your field, what are you doing and how can we join you?
Okay, thank you, Anne, for that. And this is exactly what I'm saying. When it comes to Kenyans will always know about things that are happening globally, and therefore it's always a shame if you then don't provide those solutions for those Kenyans. And Anne is an obvious example here. So behind the scenes, as I mentioned earlier, so one of the reasons why we were not trading cryptos was really to avoid the portfolio disruption that it can have due to the inherent volatility of that asset. But there's also the regulatory aspect of it, where the regulator has been very shy to allow crypto trading locally. However, behind the scenes, we are engaging the regulator, and the regulator, I'd have to say, we have a very good regulatory environment right now in the capital markets. The Capital Markets Authority is doing an excellent job in accepting as much innovation as possible and creating an environment that helps that to bud. And cryptocurrency is one of the conversations that we are having with the regulator behind the scenes. And I suspect that very soon we'll be able to come out with something for Anne Moremi and her friends to be able to trade and have exposure in cryptocurrencies. The only thing I'd warn investors is just to realize that when it comes to cryptocurrencies, you have to be very careful if you want to get into those investments. Just remember that a lot of those crypto assets are typically based on what the programmers and the trading community of that asset believe the value of that currency is. So there's always a risk that if for whatever reason that valuation was wiped out, then you can lose all your money, because don't forget that there's no fallback on those cryptos. You can't say that, okay, I was not able to sell it, but I can keep it and use it to do something else different in the future. Of course, all coins, crypto assets have different attributes, I admit that, but it's very important for retail investors to understand the risks around trading these assets. And I like the fact that Anne was very clear that she doesn't have the expertise, but would want someone with the expertise to help her have the exposure in that. And we are listening, and we'll come with a solution for that.
All right. To add on to that, when it comes to such investments, I think we shall kind of cover the portfolio allocation, or how someone can actually try and balance out a portfolio. When it comes to such investments that are risky to take, you at least put in money that you can close your eyes through the night and not worry about. So we usually advise at least about 3%, or maybe about up to a maximum of 10% of your whole net worth. Yeah. So you make sure first your net worth is above, you have a positive net worth. That is, your assets are above, are way above your liquid or your liabilities. And then you try and make the such risky investments to up to maximum of 10%. At least that one, if anything was to happen, you can easily make the money back. Or yes, if you're not going to be able to make the money back in the shortest time possible, you can close your eyes at night, the whole night, and sleep. And yeah, you won't worry.
And it's important that you say that, Rose, because I think investors also need to understand that you can always talk to a financial advisor. In fact, Vasili Africa here, that's what they do. So they offer financial advice, because just the same way you go to see a doctor when you have concerns around your health, is the same way you should really see a financial advisor when you're trying to make certain decisions around how to diversify your portfolio and so on. And it's something that I hope Kenyans will adopt more moving forward.
Yes, at least let us not go, when you're investing, don't just think about the return. Also think about how every investment solution is going to fit into your plan, your end game. Our end game is financial freedom. Yeah, just not the Yeah, the returns only. So we have so many raised hands. I would ask them please to kindly chat. We are not going to be able to allow everybody to talk through, but we can, if you can chat, we can be able to see which questions marry and then ask one question, a combined question. That is John, Damaris, Brian, Jonathan. Please, if you can kindly chat the question. Yes, there was a question that had been asked earlier about how we can compare investing in Mansa X vis-a-vis investing in SACCOs.
I think, so in fact, I saw that question earlier and I'd asked you, Ellah, about what kind of returns are SACCOs giving out here. And yes, some SACCOs are not giving bad returns, but I guess it just comes out. There are two advantages that, actually there are three advantages that Mansa X has. The first and most important, and this is why I think maybe we might do better than some SACCOs, is really just our liquidity, right? You can be able to access your funds very quickly. I've seen SACCOs out here, talk about we can give a certain return and so on. And when the investors want to exit, they tell them, okay, you have to sell some of your shares. And first of all, you're on a waiting list here. You can only someone can only buy your shares after 6 months. So please bear with us and so on. And if you're in a situation where you are trying to handle an emergency, then you find yourself in a really tight spot. So that's one of the advantages in Mansa X, the fact that we're able to be liquid enough to handle such a request quickly enough. Then the second thing is just really that we are very well diversified. I know SACCOs most done an excellent job of managing their client funds, and a lot of the assets that they invested in also tended to be assets that were gaining in value for a very long time, and specifically the Kenyan real estate market. I know a lot of SACCOs did very well investing in those. But if then you have a stagnation in any of those assets, then those returns might be compromised in the future. But if you're in a fund like Mansa X, the advantage is if one asset is underperforming, then you most likely have 2 or 3 others that are doing fine. That diversification can lead to even just a consistency of returns, which is important for investors. And then the third most important thing is that Mansa X can trade in, can have long and short trading models, meaning that sometimes you can make money if the value of our underlying assets are going up, and we also use certain derivatives to make sure that we can make money if assets are actually losing value.
Great. And to add on to that, I think it's a trade secret I should steal for our investors. SACCOs even invest in these high-yielding investment solutions that offer capital preservation. Yes, so they get good returns, then they bring back the returns to you as dividends. Yeah.
Actually, we have SACCOs who invest with us as clients. So just to answer your question, they also tend to be our clients in the fund as well. And we appreciate that business quite a bit.
Okay. Exactly. So I think we go back to the portfolio allocation. This is just a general question. How does one hedge their portfolio, and what are the preferable securities to use in hedging for unforeseen circumstances ahead of time?
The first and most important way of hedging yourself is really just invest in as many assets as possible. All right, but diversification is a very interesting thing, because a lot of people don't realize that you can invest in what you call correlated assets. All right, so if I'm diversifying myself by buying 10 different banking stocks, then I'm not really diversified, because I still have a concentration risk to the banking sector. All right. So one of the ways to hedge your portfolio is to have genuine portfolio allocation. So, for example, if I am long government bonds, then I can have some government bonds, and then I'm also invested in the stock market. That's genuine diversification, because those two are in different asset classes. Or I have bought some gold and then shorted the US dollar, for example. Those are two different asset classes. So that's what you call real diversification, and that's one of the fast and easiest way to hedge yourself. The second way, which is a lot more complex, and now these are some of the things that we employ in Mansa X, is really just employing the use of derivatives. And because what this allows us to do is, just to give you an example, we'll buy what you call option contracts. So an option contract is a derivative that gives you the right, but not an obligation to sell or buy certain asset classes based on agreed parameters. Do that, that allows, for example, if I have bought a stock in Facebook, for example, and the US stock market is tanking, then I can buy what you call put options and I'll still make money from the fact that the market is actually losing value. And funds exactly because you're able to get into instruments that allow you to hedge your portfolio. So hedging your portfolio is quite complex, and it's one of the reasons why we encourage investors to invest in a fund like Mansa. It's exactly the reason why, because we are creating a very simple to invest into vehicle, but a very complex vehicle behind the scenes that really protects you and allows you to have exposure to instruments that on your own would have been very difficult to even ever know how to trade in, unless you're a full-time trader.
Great. So literally it's just, what do you call it? Collective investments into global markets, those investments that, yes, I can see, probably I want to invest, but I don't know how to go about it. Yeah. There's a question about diaspora. Yeah. So for the diasporas who want to invest locally with travel restrictions, can you open and fully set up an investment plan with SIB individually or as an association of diasporans? So basically, I think I see whether I can summarize it. It's just, what is the option for diasporas to invest in SIB? I don't know whether it's through Mansa X. Perhaps you can clarify that, John. But I think
he wants to know whether he can invest as a diaspora client.
Yes.
Or rather a diaspora resident. Yes, you can. I mean, we have a lot of diaspora clients invested with us. Mm-hmm. And if you reach out to us, whether through our website or send an email to us, someone will reach out to you quickly enough and take you through the process of opening your account. This is something that we have done for investors as well. And even if you're a US citizen, we are FATCA registered, and we are also registered with the IRS. So we're able to, even from a tax perspective, you're able to show Mansa X as an investment, and they'll recognize that because we are part of the FATCA framework. But I would imagine you're Kenyan. So if you are, then it's much easier to come through the Kenyan, on a Kenyan platform. Because then even from a tax perspective, here you don't get taxed if you're invested in Mansa X.
Okay. In regards to tax, there was a question on whether there is a foreseeable tax on profits from Forex.
Well, the returns from funds like ours is categorized as capital gains because most of our asset classes, most of them, not all of them, but most of them are really just market determined returns. So yes, about 2-3 years ago, the government tried to have capital gains tax on capital markets trading, even in the stock market, but it's very difficult to implement because how do you tax something that, one day you're making a profit and maybe you lose the next day and so on and so forth. It's not really a continuous return. It's very difficult for the government to tax, or rather they scrapped the capital gains tax because it really just slowed down trading and became very complex for people to make their tax returns. Do I think that maybe one day the tax might return? Of course it might. I mean, the more lucrative an industry becomes, of course, the government will look for a way to tax it. Because, I mean, even if you look at the US now, they've proposed an exorbitant capital gains tax of 40%. And this might just come in September. And of course, we suspect one of the reasons they introduced such a hefty capital gains tax in the US is really just to capitalize on all this crypto trading that's going on. So if something is lucrative enough, of course, the government will find a way to tax it. But at the moment, let's take advantage when we are not being taxed.
I actually wanted to say wasikusikie.
Wasilisikie.
Wasikusikie.
Yeah, so let's not encourage that conversation.
Please don't record. So there's a question on compounding, if Mansa X compounds over a period of time. The other question is if someone signs up, I think this one was answered, Beryl. If you sign up, do you sign up for a specified return? No, we said the returns that are already there are past performance returns. So we can only wait and see. It's more like a wait and see, but now we have a very able portfolio manager and investment manager, who is running the show. So we can only wait to see the returns. Over about the compounding.
So compounding, I mean, compounding as a function assumes that every day you have an ever slightly increasing return, okay? So the reason why compounding is very difficult to explain in a fund like ours is because I might have 2 profitable days and maybe 1 day that's not profitable. So yes, there's an element of compounding, but not as smooth or exponentially as you'd have in a fund that makes a fixed return. So I'd say maybe if you looked at compounding from a fund like ours, which has a lot of what you call a discrete return from day to day, then maybe compounding from a yearly perspective then can make sense. That if this year I made a return of about 18%, and then I did not withdraw any of my funds, and then started the new year with that return, then I am compounding annually. But if I'm compounding, the lower the time period reduces, the more the compounding doesn't make a lot of sense because of that aspect of day-to-day shifts in market revaluations. So that's why it's a bit different from a fund that, say, has invested purely, say, in fixed income. So we know that, quarter on quarter, we are receiving a certain coupon, for example, and then my capital base can never change. And that's why it's a bit difficult to really use that compounding function in a fund like this. But there's an aspect of it, yes.
All right. I think very well answered. What's your take on savings and credit cooperative organizations? Celestine, his take, or on a personal note, or I don't know. Maybe you can
That's
answer on personal notes. Yes.
I thought we discussed SACCOs, yes, but I mean, I'd say SACCOs. I mean, there's also one advantage of SACCOs, because you can borrow from them. Okay, so they might be useful for an investor who probably wants to save for a short period of time and then wants to borrow against that. So there's that advantage. But maybe my only issue would be going back to liquidity. For me, liquidity is very important. And I think it should be for any investor, because if you invest in this SACCO, please check historically what kind of turnaround time do they have when it comes to paying their investors if the investors need to access their funds as and when they need those funds. That, I think, is critical for you just to check. But any avenue which encourages you to save an extra penny is obviously something that we encourage.
It's true that cash is king. Cash is king, yes, especially in these times. Yes, cash is king.
It is.
I don't think I can add anything else to that. Can we invest as a registered chama? Yes, you can. I'm answering some of the questions as we go.
Thank you. Thank you.
What is your outlook for 6 months given the current data on PMIs?
Okay. I know right now everyone is looking at the inflation numbers because we're trying to see, I mean, how is the Fed going to change rates? Are they going to change rates? One of the things we are really looking at is, again, I mean, and even just to go back to PMI numbers, we find that these figures right now, especially this month and last month, are a bit distorted because if you look at the yearly numbers, then you're really looking at them compared to a COVID period last year. So we are not so sure what to make of those numbers. But we are also looking at the 10-year US Treasuries. So for us, that's a very important number for us because if you look at the entire US stock market, the average dividend yield is about 2%. So if the US Treasuries are above 2%, that's usually a concern for us. So last month, they had ticked a bit higher. They were approaching 1.8, but now the US Treasuries have ticked lower to almost below 1.6. So that gives us comfort that the US stock market will continue to rally. Another concern we had, and this was a big one for us, was especially around the capital gains tax that might be introduced by the Biden government. And that's one of the reasons why the US tech stocks had really lost value last month, mostly because tech stocks are the ones to be hit the most by capital gains tax. And why is that? Because where would capital gains tax hit you? It will hit you because you've sold that stock. So who are the investors who buy and sell stocks on a daily basis? It's usually retail investors. So which stocks are mostly owned by retail investors? It's mostly tech stocks. Okay, so we find that, and that's one of the strategies at Mansa X. We typically tend to look for very good, stable companies that pay good dividends and are largely held by institutional investors, as a way to protect ourselves from policies around taxes that you really cannot control. So we think the next 6 months, stock market will continue to be robust, especially for value stocks. And especially as we start getting our volume, our liquidity back from this summer period. But for the next 2 months or so, I think there will not be much liquidity in the markets. So, and this is one of the reasons why, again, we always insist on buying dividend stocks, because when you go through a lull, like we expect the next 2 months or so, then you're still earning your dividends. And that's why we don't typically invest a large portion of the fund in growth stocks, in spite of the moves that we have sometimes seen and missed because of that strategy.
All right. Please take a sip of water, Nahashon.
No, I keep forgetting.
Yes, we have a lot of questions that are coming up. Of course, some we can combine them.
Okay.
Most of them we can combine. I think we've answered about the Chama. There's someone else who had asked just below. Then there's someone who's asked about top-ups, minimum top-ups. And then what's your outlook for the next 6 months? I think that one you've answered. About the Q1 returns, I think you can clarify given the fact sheet that was out. So the question is on 20, we have talked about 20%, but annualized return, more like if everything, I think, let me answer that. If everything remains constant, whatever we made in Q1, we just more like, what do you call it, project, if everything remains constant. He said 20% annualized return, not, yes, because I think the Q1 return was about 11%, 10.8, 11%. Net. Yeah, you can correct me if I'm wrong.
Yes, that's correct. Yeah.
Yes. I don't think you need to add on to that, but maybe you can clarify. Because I think there's another question on the same below. Okay.
So I know there's a time, and this one was really a very serious operational concern around here, because there's a time I know we had, as might happen to every institution. So sometimes your systems might have an issue. So we had an issue around how some of our statements came out in Q1, and this has since been really rectified. And we were very clear that there was a lot of, it was really a system software issue that we had. But again, it's very good that you make it clear that when we talk about the returns that we talk about, don't forget, even as an investor, your returns can actually also be determined by when you join the fund, all right? I mean, because for example, if say January, February, March, maybe January we had a return of say 5% in a month, that's a high return. Then February and March were really underperforming months, for example. Then if you came in February, you will probably have a return much lower than an investor who came in January, all right? Because again, and I have to make this very clear, our returns are not, it's not a smooth return. It's not we have invested in a bank savings account where we are being paid 10% guaranteed. It's a market determined return. So depending on what point you come into the fund, your returns may typically be different from what another investor might show. And this is actually the exact reason why we insist that investors should keep their money with us for some time. because if you keep looking at it from a very short period of time, it can be very confusing and stressful to you. In fact, at the beginning, we used to wonder, should we allow investors to view their statements on a daily basis? And one of the reasons we decided against it was exactly what you're asking, because if from a very short-term perspective, investments can seem very erratic, but from a very long-term perspective, it becomes very clear what the fund manager was trying to achieve for you.
All right. Minimum top-up after you have invested 250 initial investment?
Our minimum top-up is 100,000 shillings.
All right, Robert, you have been answered.
Is it my network?
It is Rose's network. So I think, Rose, you should look at your connection. You're having challenges on your end.
Yes, and I think, Betty, you have been answered on the prorated, whether the returns are prorated. Yes, they are. It depends on what time you come in and the time that you can get out. I hope you can hear me.
Yes, we can hear you.
All right.
Yeah.
Erastus, I think we had been answered on how SIB is managing to get over 20% returns. The answer is really diversification and a very good choice of asset classes.
And even just again to that, he says that there's a harsh economic environment. If you look at most asset classes, they're rising in value. It's let's be very clear about which economic environment you're talking about. Globally, the economic, most factors of production are back up. Oil prices are back up. Even gold itself as an asset. And by the way, we have been holding a significant amount of gold from 2018, and that is also going up. So when you say harsh economic environment, you have to be very careful what you mean. I mean, if you even look at a stock like Safaricom, just from last year on year, we've gone from 28 to 41 shillings.
41 shillings, yes.
I mean, that's a rise of over 70%. So let's be also very clear what harsh economic environment means. It's very subjective.
I agree. And then I think we talk about the structure again. I think there are people who joined later on, but we just talk about the structure of Mansa X that will answer like 3 questions that are there. So the question is from Beryl and the other one is from J. Archie, whether it's governed as a collective investment.
All right. So Beryl is the one who's asking what instruments and whether they can choose, yeah?
Yes, and then the one below is just about
the structure.
The structure. Yes.
Okay, the Beryl one is simpler because it's really we are a discretionary fund, so we choose what to invest in on your behalf, and there's a reason for that, because if we were to constantly change our portfolio based on the input of our investors, even when they mean well, it will be very confusing to the returns of the fund. I mean, that there are so many asset classes that investors would recommend or not recommend that it will become very difficult. It will be the classic case of too many cooks spoil the broth if we tried that strategy. However, if you came to us and you are looking to buy certain asset classes just for yourself, we'd be happy to guide you on how to go about that. We can help you with that. Then yes, you are right, Jay Archie. We are sort of like a unit trust fund, correct? Especially in how even we value the fund. That is right. And we are now classified as a special CIS. So, very soon the CMA will come. I mean, right now the CMA is completely changing the regulatory framework for unit trusts, not just for ourselves, but for other unit trusts as well. And this framework, one of the things that they have really highlighted to us is they want to categorize us as what you call a special CIS. So you're right about that. Yes, it is a CIS. And for that reason, we will now also have to have a trustee for the fund, which before we did not have to have. But we are happy to do that, if only to give our investors comfort. And yes, we do have investment policies. In fact, I mean, this is something that we are required to have by the CMA. We are required to have an investment policy statement. We are required to have, so we did not typically have trust deeds before because we did not need a trustee, but now we have to. We are also governed and monitored by a very robust investment committee, which meets bi-weekly. And yes, we are now also required to have half-yearly reports. So these are some of the things that are now changing, including the audited reports. And AGMs for investors, that one I'm not so sure. But we keep having this kind of webinars with our investors. So even if not from a regulatory perspective, it's something that we still feel it's important just to keep talking to our investors. So Jay, actually, you are right on 1, 2, and 3. Yeah.
Is there a relationship between SIB and standard?
A relationship between SIB and Standard Investment, and Standard Bank. I'm not so sure I got that. Rose, I think we lost you there.
Rose, we cannot hear you. I don't know. Maybe you should check your bandwidth. We cannot hear you completely.
Maybe I can just continue answering some of the questions I'm seeing here. Somebody asked whether we can share a link to account opening guidelines. Yes, this we can share. So that's from Corinne. Corinne, if you send an email to us, and we'll share the contacts after this, then yes, we'll send you the account opening guidelines. Robert Kasamu is asking whether they can invest in external stocks. And can everyone hear me? Victor, you can hear me? Victor, you can hear me? Continue. All right, so Robert Kasamu is asking whether he can invest in external stocks other than the NSE through SIB. He says, I'm interested in investing in Elon Musk's Tesla and SpaceX. Yes, please reach out to us. We can guide you on this. Of course, the minimum for this is a bit high right now, but yes, we can help you invest in external stocks just like we do through the Mansa product. Okay, so just a minute as I confirm something. Rose, you can hear us?
Hear me?
Yes, we can now. We had lost you there for a minute.
Nikimbilia chaja. Sasa ndo nimerudi. Nilisikia nikiwa kwa Dominic.
Rose, are you there with us?
I think we'll need to proceed without Rose because her internet connectivity is not the best at the moment. So I think we'll just pick up from where Rose was.
Okay. All right. There's a part where there's Damaris Njoki was asking about whether we're going to introduce a portal where one can track the daily gains.
Maybe I can pick that because it looks like it's on the communication end. So what we are working on is an application, the Standard Investment Bank application, and it's already available on the App Store in beta mode. So we've not yet launched it. But in terms of will it be able to track your account on a daily basis? No. But there's a number of functions that it will have. That is from say if you want to create an account, you want to register for Mansa X, you can create an account and then we can approve it internally. You can also be able to request for your statement via that particular application. But then now in terms of whether you'll monitor your account on like on a live mode, that's not possible. And maybe Nahashon can explain why that won't be possible, being able to track how your account is performing live.
I mean, it's really just a psychological reason because, I mean, markets are very erratic. And this is something that investors like Damaris and Njoki need to ask themselves whether they're ready for that. Because you're not talking about markets where every day you're constantly making profits. If we told you that, then we'd be lying to you. All right. We have good days, we have bad days. We just try to have an average of better days than bad ones. Now, if as an investor, you're constantly tracking how much you're making every day, then it doesn't even make sense what you should be paying as the kind of management fee that you pay us, because then you're going through the same level of stress as we are. And that's one of the reasons. So the one I agree with is the part for getting your quarterly statements not being automated. That's a concern because essentially you should receive your quarterly statements in an automated fashion. I know we had a bit of an issue in Q1, like I mentioned earlier, something happened, but that has since been fixed. And we are really hoping that our investors will have a flawless way of receiving their statements from now, as they were last year, for example. Yeah.
Maybe in addition to that, I know you'd. I'm not sure whether you had responded to the question about is my initial capital safe, and that question has been asked by 2 users on our YouTube channel, Damaris and Aisha. In the event of a loss, is my initial capital safe?
It's always a hard one to answer that. Why? Because since we are not a guaranteed fund, then we cannot say that we can guarantee your capital. All right. Number one, even from a regulatory perspective, no fund manager is allowed to say that your capital is safe. And if you find a fund manager telling you that, you have to really ask yourself a few questions, because so many things can go wrong in markets, okay? And even what you consider risk-free investments, something can still happen, all right? Don't forget what you consider the safest form of investment is government bonds. And we've seen some government in Africa actually default on bonds, all right? So the safest way, the only way you can safeguard your capital ever is to do nothing. And even then, inflation is a risk for you, all right? So there's no risk-free investment, essentially. So the answer for me, therefore, becomes a bit more technical, where I then tell you that we approach your investment with a very serious due regard for risk, okay? We employ significant risk management techniques to prevent you from actually losing any of your capital. Okay, we work very hard to prevent that, but we do not guarantee it. So it might sound like I'm contradicting myself, but that's really the best we can say around that question of safety of capital. And it's a very good thing for you as an investor to ask yourself, what's my level of risk that I'm willing to take in any investment that I invest in, all right? And be very careful to think that an investment that says that it's a safe investment is a better one than one that says that it's not. Because then the one that says it's probably a safe investment might underperform inflation in the long run and leave you worse off in a few years. Because especially if you're younger, then you're looking to get into above average yield in funds for at least 10 or 15 years for you to confidently say you can retire comfortably. But if you're constantly looking at risk and the safety of your funds, and going to relatively lower risk investments and getting a below average return, then over time, you might actually compromise your earnings ability in the future. And that's a real risk you need to look at, which is why I mentioned earlier in this conversation that as investors, it's important that we also talk to financial advisors around such questions. It's very important that you do that.
Okay, thanks, Nash. So on to the next question. I don't know that you answered it. It's misleading to annualize returns, a question around annualizing of returns. So they were saying that it is misleading. If you make a profit and annualize it, looks good, but if you make a loss, the quarter, you not annualize the loss. I think just to clarify this, and for all our investors who receive the fund fact sheet, what we report, it is a requirement by CMA now, I think, for all fund managers that we report actual returns and not annualize it. So what you see indicated on the fund fact sheet is an actual return per quarter, and then now when we add it cumulatively to the end of the year. I don't know that Nahashon would like to add anything to that.
That's exactly correct. And the reason why they actually asked us, I mean, maybe it's for the same reason that we might mislead investors by making it look like whatever we made this quarter will also make in the next quarter. And we have completely complied with that. And this is not something that is unique to Mansa X. It's really something that all fund managers do. If it's misleading and confusing, obviously, then we're happy to actually give both numbers. So we actually even give both numbers, Victor, if I'm not wrong, right? We give both.
So
do we give both? Yeah.
In terms of what we report, we will just give the net and the gross.
Yeah.
That is without 5%, with 5%, but we are no longer annualizing.
Okay.
We're no longer annualizing.
Fantastic. Okay.
Next question, Maureen. I think this question we've answered this question. We've said that we will launch the app once we are done with the developing work. It's available on beta. When you go there, you'll see it, but it's not yet ready for use. So that interface will be provided. So we're hoping that we'll close that latest by next quarter. Sydney Ether, IFA question. Do you have an opportunity to be an IFA with SIB, specifically with Mansa X? Yes, we have a number of IFAs who are already registered with us. So you can just send us an email to sales@sib.co.ke. We will pick it up with you, and then we will guide you through the registration process, and then you can become an IFA with Mansa X. So we already have a good team, and we appreciate them. Proceeding up, we've responded to that. Do you entirely invest in US stocks or also other markets, e.g. UK or China stocks? Nahashon?
Yeah, so we invest in other markets as well. So if you come and look at our portfolio, we do own stocks on the London Stock Exchange. We have quite a few stocks, actually. We own stocks in the German Stock Exchange as well. We own stocks in various of the many of the major world stock exchanges, but we still haven't started investing in the Asian markets. So not yet. We haven't gone into that. And we are working with what you call liquidity providers to allow us access to those markets, but we haven't gone into them yet.
Thank you. I think Richard says, does Mansa X need global macro traders? Email me. So I think we already closed that process. We ran a competitive competitive process, and we were able to get new members to our team. So unfortunately, that will have to wait until we come back to us, maybe looking for others who are looking to join the Mansa X team. And then Jimmy Bet asks whether our fees are negotiable.
It depends. It depends. I mean, that is one of the ways to look at our fees is also to look at how administratively involved in Mansa is to run. And that justifies the fee that we charge. And if you look at the resources required to run a fund like this, from the perspective and where we are based, and it becomes very expensive, and that's why we charge the fee that we charge. But that is not to say, for example, we have institutional investors who will come to us and invest as much as 100 million shillings per investment, and we have a few investors like those. With them, it's from that. The argument of administrative involvement reduces a bit. So we're able to reduce that fee a little bit for them. And so to answer your question, just reach out to us. That's all I can say.
Thank you so much. Next, I'm interested. Sorry. Vincent Ogutu, I'm interested to learn about Mansa X. It's okay, we'll get in touch with you. You can see that you've shared your contact information. And then advice when withholding tax will apply to our gain. I don't know whether you responded to that, Nahashon.
So when it comes to withholding tax, so right now, the return of Mansa X is really a capital gains tax because it's not a market, it's a market determined fund. But within the fund, we have some instruments that require us to pay withholding tax, right? Because even within Mansa X, we still invest in fixed income, we still invest in bank placements and so on. So we still pay those taxes on behalf of our investors. So by the time you're receiving a return from us, we have already made these payments on your behalf. And that's another advantage of the fund. So there's nothing extra that you then need to pay, but it's important that you show this in your returns for obvious reasons, because it also implies how much you own and how much you're actually making as an individual.
David Njuguna, do you have plans to introduce an investment which initial capital is below 100,000?
Yes, we mentioned that earlier. And remember, we said we are at the tail end of testing a product like this, because it's something that a lot of investors have asked us. And as Standard Investment Bank, we are very committed to bringing innovative products to everybody in the market. We do not want to segregate against anybody. So yes, we are very keen on that.
Vincent, are you concerned about your strategies losing their edge, as happens with some hedge funds over time?
Of course, that's the one thing that keeps every portfolio manager asleep. I mean, awake at night, including myself, because just you have strategies that work, and you hope that these strategies continue to work for you. I guess the trick is to constantly not get in over your head and just keep a lot of strategies simple enough, and to also operate within risk management limits. A lot of hedge funds are brought down by leverage. Okay, it's one of the unsaid factors for most hedge funds failing. It's not because they really lost money in a certain trade and so on. It's because they lost in a certain trade that was very highly leveraged. It's something that we are very careful about, and we endeavor to continue working within certain risk tolerance limits as imposed by our investment policy statements and our investment committees. And this is reviewed regularly on a bi-weekly basis. We're always looking at this to see whether they continue to be relevant in terms of managing our risk. So yes, keeping an edge is something that we're always careful about. But due to the fact that some opportunities can also only be availed to you if you have enough capital, at the moment we feel that Mansa X needs to grow even bigger to even access certain even more lucrative and with less proportionate risk opportunities out there than we're currently in, and reduce our reliance on leverage as
well. Okay. Ross will be joining us will be back shortly. So saying okay, as we wait for Ross to get back to the driving seat, we have a trader who says that he's looking to liquidate his positions and invest in Mansa X. So he wants to know whether we can give what could be our consistent ROI for the next 5 years if he was to liquidate his positions and invest in Mansa X.
5 years. Well, I think the only thing what we say is we try to give a higher than average return. It would be very, very presumptuous of me to sit here and give you expected ROI for the next 5 years. Okay, we expect to consistently give good returns, but we are not able to give you a number that we expect to give for the next 5 years. That would be rather presumptuous, yeah, I think.
Okay,
but yes, please liquidate and invest with us. We still expect to give good returns. Yeah, for sure.
So Mary Anyango is asking, when are you planning to open an office in Kampala, Uganda?
Well, we're getting a lot of questions around opening satellite offices. So one of the strategies that we are using is really just using an extensive network of agents, because sometimes you really do not need physical offices every time for this sort of thing, because our trading operations are really domiciled in one area and you don't need that much space to do that. but it's very important for us to serve investors from all around East Africa. So there was a question earlier of where is the future of Mansa X and what do you expect for the future? One of the things is really just to hit the region and be able to offer this opportunity to everyone in Africa, even forgetting the region. So yes, to answer your question, for now, reach out to us. Whether we have an office in Kampala or not, we will still be able to invest on your behalf. But moving forward, this is something that the board is constantly deliberating to see how best to approach these requirements from our regional clients.
Next question. There seems to be a push to market and advertise Mansa X. Is this a sign you need more liquidity pumped into the fund?
Well, that's a very interesting question because Mansa X is a business. It's a product that we sell. All right. So SIB owns Mansa X as a product, and it's in our best interest as an investment bank to continue growing the number of users of this product that we have then created. And that's what we advertise. Okay. We are able to run Mansa X with 10 million shillings under management, the same way we are happy to run it at 100 billion shillings under management. But no, we are not doing that because we are trying to get funds in for whatever reason. No, it's because it's a business that we are running. The 5% management fee that we earn, that is part of the revenue that we earn, and it's from there that we then pay our expenses and so on, and that constitutes the return that SIB makes. So it goes without saying that, yes, we have to market as aggressively as possible if we have to get the message out. And don't forget, even the value proposition for Mansa X is a bit different because we've created a unique. So there's also the need to educate people about it. So this might seem therefore that we're always in people's faces, but it's really because part of marketing the fund involves educating the public about what the fund is about and what it entails.
And then we have the next question. What regulated crypto traders can one invest in personally? I don't think we have any.
Okay, locally none. Globally, well, there are some exchanges that you can access, but I would say, as I mentioned earlier, you have to be very careful when it comes to cryptos, especially if you do not know what you're doing. But locally, there are none that I actually know that you can invest in. Not yet. We don't have.
Can one invest for their children under their children's names as an inheritance benefit to them upon death of a member?
Of course, these are legal structures that, yes, if you reach out to us, we'll be happy to structure this with you. Absolutely. I mean, we've even had clients who've invested, especially, I mean, during this COVID period, we've been actually unfortunate enough to lose clients. So yes, we are very happy to structure these things with our investors, and part of our account opening process is even just telling us who your next of kin is, for example, and we are happy to then do that from a legal perspective. Yeah.
So James Waithaka, we have invested in Mansa X as a company, and so far so good with the returns. Wanted to introduce other investors, but as an agent to earn a commission on it. Issue is your requirement to be an agent are very limiting. Would love this to be looked at. James, I think we can pick this up with you. If you can share with me your email address, I'll pick this up with you, and then we shall be able to find out how to make it easier for you to become an agent with us and earn a commission on the business that you bring to SIB. Next, I think you've answered on withholding tax, and then what are the best government bonds to invest in? That is Joe Gikuhi.
Okay, well, I'd say Kenyan government bonds are fantastic. There's a lot of stability in Kenyan interest rates, especially after the interest rate capping. But I'd say for an individual investor, infrastructure bonds, local infrastructure bonds are very good because then some pay as high as 12% on coupon without actually a tax implication on them because they're not taxed. So that's a very big advantage. Globally, African Eurobonds are very interesting to invest in because then you get about 7% yield on dollar-denominated bonds, which is quite a significant return if you think about it, because the risk that is priced in on most African governments we feel is of is overemphasized. So there's always that advantage that you have. So yes, I'd say that Kenyan government bonds, infrastructure bonds, to be specific. If you have the funds, then maybe African Euro bonds.
Okay. Do withholding taxes applicable on certain asset classes count as part of management fees, or are they passed on to investors on the return net of fees?
Okay, so this is one I was saying that, yes, withholding tax, by the time we are giving you a return, we have paid our the withholding tax on any asset that we hold that has a withholding tax aspect. So now you receive all this net of all those taxes.
And then, yeah, Rosella is back now as she's preparing. James Kaima has asked whether we will share a link. This will be available on YouTube, so we'll share this link on all our social media pages and to everyone who signed up for this particular conversation. Rosella, I think you're back. I don't know whether you're ready to continue.
Yes, I'm back. I do not know what happened to our network. It just dropped off completely. I hope you can all hear me now.
Yes, we
and
can.
Thank you so much for the patience. I think we are clocking into 2 hours already. In Nahashon, how many liters of water have you taken? Yeah. So I think we'll limit the questions to, I think we can do a maximum of 5 more questions and then we close out. Then we can we can answer all the other questions on email. Yeah. I don't know what you feel about that, Nahashon.
Nahashon, you're on mute.
Yes, that makes a lot of sense. Thank you, Rose. Thank you.
All right. Do you give advisory services to new investors based on their risk appetite as they're joining? Yes. I will answer as Vasili. Yes, we do. And also answer on behalf of SIB, Mansa X. Yes, they also do. Yeah. So I think that's the last question that had been asked. Then can you use the investment in Mansa X to get a loan facility from a commercial bank?
You know what? I think you can. I believe you can. So if you had such a requirement, what I'd recommend that you do is reach out to us. Then we can have a conversation with your bankers on your behalf, because then your bankers would need to probably take a haircut on the investment that you have with us based on the implied volatility of the fund. And this is something we can help you to do. We've had investors come to us with the same concerns, yes.
All right. And then what informs the name Mansa X? Back to you, Nahashon, given that.
It's interesting, I did not mention this at the beginning. So yes, so the reason why the fund was named Mansa X is because this fund is named after the richest man who ever lived up to now. And this was Mansa Musa. So Mansa Musa was a king in Mali, in Africa. And that was a very wealthy kingdom. You know, if you've ever heard of Timbuktu, that's actually where that comes from. So we found this story very fascinating, especially around how, you know, they were the biggest producers of gold and were able to, you know, move this gold around the globe. And at some point in the Middle Ages, you know, it was a sign of wealth to hear that somebody comes from Timbuktu and so on. So we felt that what happened to the shift of power, that at some point then it became more lucrative to say that fund managers in the West make more money than, you know, fund managers locally. So we felt let's bring the fund back home, and that's why we decided to create a local fund, but a fund with a global presence. And we felt that the most appropriate name then would be to give a tribute to somebody who had already done that in the past very well, who was Mansa Musa. So we named the fund after Mansa for that reason. X is really just, it gives it an edge. Okay, so if you add X to something, it gives it an edge. So Mansa X, because they felt it's very easy for someone just to remember something when you add that X at the end. And this is really something we got from our marketing companies that we use, and we found that it really works. Yeah. So that's the background.
I agree. It's a very catchy name.
Thank you. Thank you.
There was, since you invested in overseas products, will you consider allowing clients to invest in foreign currency? I think that question has been asked a lot.
Yes. And I think Ellah, we definitely have to. Eventually, we will definitely open a fund that allows investors to invest in dollars. It's also really just a question of how many people are interested, and it's clear that there are a lot. So we will definitely continue having this conversation internally.
Okay. All right. I think from the story that you've given about the name or the story behind the name Mansa, we'll have a few kids being born next year called Mansa. But like
they should.
We should, yeah?
Yes.
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 All right. I think no more questions yet. I think, Victor, you did a very good job. Thank you so much for holding forte when, internet decided to act up. Asante sana. I don't know whether we have any more questions that are coming in, but please keep them coming. I think our lines are open. SIB, please send in your contact so that people can reach out to you, your telephone number and the like, so that people can reach out. For Vasili, our website is www.vasiliafrica. I'll just type it in to everybody. Yes, .vasiliafrica.com. For Standard Investment Bank, the email is clientservices.sib.co.ke. If you can write it down, the website is www.sib.co.ke. So you can go through the website, learn everything that you need to learn when it comes to investments. But please make sure before you invest into anything, you ask questions, as many questions as you can ask, such that you can also be able to explain it to a 2-year or 4-year-old, not 2-year-old, but 4-year-old. So yes, our website has been typed there, vasiliafrica.com. So you'll get our contacts there as well. Get in touch with us, and our email info@vasili.com, vasiliafrica.com. But from me, asanteni sana for keeping us company for the last 2 hours, and it was a very interactive session. Yes. Nahashon?
Thank you very much. Rosella, you've done an excellent job moderating this, and Victor, thank you very much. And everybody who attended and all your questions. The only thing I'd want to add is I've seen a few technical questions from, I think, traders and maybe some investors who have exposure to global financial markets, especially around my opinions around US inflation rates, what I think about the direction of the dollar moving forward, what I think about the US stock markets, what I feel about the Federal Reserve policy moving forward. Please give us your email addresses, and we'll be happy to share some of the commentaries and write-ups that we do around these issues. And we'll be very happy to even just share ideas and thoughts with you, because we are not necessarily saying that what we send you is a correct thing, but it will be very interesting to just have conversations around this. And really, we believe that that's how the market can actually grow. So thanks again for having me today. It was a real pleasure just interacting with you all. Thank you. A nice evening.
Asante sana. Have a very, very beautiful evening, but please keep the conversations going. Shoot the questions as much as you can. Thank you so much. So there are a few emails that have come in. I hope, Victor, you've captured them.
Yes, we'll capture them, and you can continue sending them in. You can send other questions to clientservices@sib.co.ke. You can leave questions on our social media platforms where we have posts concerning this particular conversation, and then we will find a way to send feedback to your emails if they're going to be available.
Thank you so much. Have a great evening. Please get home safe. Sanitize.